All right. So I think one of the hardest parts of this chapter is what they call a bank reconciliation, where especially for like our young college age traditional 18 to 24-year-old
Who
student,
check registers?
they don't do that anymore, right?
No,
And
none
so
of my older kids do that.
no, because your phone will just text you with a balance. Why do you need that? Um, and I got to tell you, I'm a lot lazier about it than I used to be. But the reconciliation process is the process by which you check what your bank statement says you should have with what your books or your records say that you should have. The problem with this is um, there are items often that you have recorded in your book, but they're not on the bank statement yet. Especially like if you wrote a check and you gave it to somebody and then that somebody never deposited it. Well, it's going to show up on your books, but it's not going to show up on your bank statement. So you'd have to adjust the balance, what your bank statement says, to account for that. Or there might be things on your bank statement that aren't on your books. A lot of times people will have the bank collect for them. Like I have a renter who rents a house I used to live in, and he just sends his payments into the bank. And so I don't really write them in my book until I get my bank statement and know that it actually hit the account, and then I add it to my book. And so I would have to adjust my book balance for those things. So that's the challenge with the reconciliation process. So in essence, what we have to do is we start with the balance that the bank statement gives us, and then we're going to make adjustments to that balance. That's going to include adding any what they call deposits in transit, which means deposits that we have put in the bank and written down in our books, but they're not yet showing on the statement. That usually happens if we deposit, near the end of the period, at the end of the month or whatever, however our accounting period. And then we would subtract any outstanding checks. Those would be checks that we've written. So we recorded them in our book when we wrote them, but they've not yet cleared the bank. So they're not on the bank statement. And then adjust for any bank errors. Occasionally you'll find an error on your statement and your book says one thing and the bank says the other, and you call the bank and you find out, oh, the bank made a mistake, and they'll correct it. So those would be the adjustments we would make to the bank balance to get our what's called the adjusted bank balance. Then we would look at our books and we'd make any adjustments to that balance, including any money that was collected and shows up on the statement, but we've not yet put it into our book or our records. And subtract any NSF or non-sufficient fund or bounce checks, money that we would have recorded in our books as having received, but when we get our bank statement, we find out, oh, we don't really have that money. And we subtract any service charges or other payments that we make to the bank or others through the bank. And then we'd add or subtract any errors that we made on the company side. So this is the process, okay? So let me walk you through one and see if it's helpful to you. All right, so here we have a bank statement for the Layered company, and it shows we have a balance in our bank account of $15,907.45, and the balance on our books is $11,709.45. And then we have, it says the following reconciling items. We have deposits in transit of $22,001.40, outstanding checks of $59,004, other deposits, etc. So we have all of these different adjustments that we're going to have to make. So the trick is knowing where we place those adjustments. Okay. So in the process I just gave you, I said on the one side we'll start with the balance that's on the bank statement. We'll add any deposits in transit. We will subtract any outstanding checks, and then we would make any adjustments for bank errors, and we don't have any bank errors. And then on the other side of our reconciliation, we would start with our book balance, and we would add any other deposits, subtract any other payments, and then adjust for company errors. So even though they just showed it to you side by side, just to make it confusing, now they're going to show it to you top bottom, but it's the same idea. So again, the cash balance per the bank statement, add in the deposits in transit, subtract out the outstanding checks. We're left with our adjusted cash balance from the bank statement. We take our books, our book balance, We add in those electronic funds transfer received. Again, the things we're adjusting our book for are any items that we didn't have recorded in our book, and now we're getting the bank statement and seeing, oh, we have 1,035 more in there than we thought we did. We also have our error in recording our check. Since it was an error that we have to add in to bring our account balance right, we'll do that. And then subtract out the NSF check, our debit credit card fees, etc. And that gives us an adjusted balance, and they should balance. So again, the whole process of reconciliation is bringing our book balance and bank statement balance into alignment after we've adjusted for these items. The last thing to consider is when we make adjustments to our book, we have to make a journal entry to actually enter those things into our book. So, for example, we have this collection of by electronic fund transfer. We'd have to show our cash going up, our accounts receivable going down. To account for our error, we'd have to show our cash increasing by 36 and our accounts payable going down. The NSF check, we'd have to show our accounts receivable going back up because we thought someone had paid us, but now they didn't. So accounts receivable goes back up and then cash goes down.
Oh, that was my question. You answered my question.
Okay, and then bank charges. And if your bank's charging you $150 in bank charges, you might want to find a new bank. But your bank charge expense is debit and your cash goes down. I think. Oh yeah, I also wanted to just. I went through that really fast. You can ask questions if you want. The other thing I wanted to talk about just briefly is cash equivalents, which we already talked about. Or I told you that it's in the book there, but cash equivalents are, they're very short term. They have to be, in essence, convertible to cash within 90 days. And they have to be highly liquid, which means liquid in financial terms means like something that can be cashified, right? Like turned into cash.
So like checks and stuff.
Right. But not like, sometimes like I'll have stamps sitting there for mailing stuff. I could probably go find someone and sell the stamps to them, but it's not really like a liquid asset that's just redeemable for a fixed amount of cash. So it has to be readily convertible to a known amount of cash. And this is so near their maturity that their market value is relatively insensitive to changes in interest rates. I would just say, instead of worrying about that, just say 90 days. So anything that is mature in 90 days and convertible to a known amount of cash. And by known amount of cash, I mean, like you could take any stocks that you had and you could sell them and you could get cash for them within 3 or 4 days. So they're highly liquid, but they're not highly liquid for a known amount of cash. You're gonna, the market, if you're like me, the market has punched you in the gut and taken your lunch money over the last 3 days.
Yeah.
I've watched some of my retirement money tank, and I'm like, do I panic or do I wait for this thing to hit bottom and then put more in, right? Like that's my choices, and hope I don't catch any viruses. And then restricted cash is just, sometimes businesses have cash. For example, I have a little account where every month I pay like $500, well, not 500, I pay about $300 into this account, so that at the end of the year I can pay my property tax, because my business is property intensive and it's about $4,000 in property taxes. And so even though I have that cash, I will call it restricted cash, so it doesn't get counted into my cash and cash equivalents. So here's some examples of cash, and this might help with problem 7-12 as well, or exercise 712. Examples of cash include currency, coin, checking and savings accounts, and then some cash equivalents might be like short-term T-bills, undeposited customer checks. Like my mom used to receive checks from her customers and just put them in a bank bag until she, made the deposit. Short-term corporate notes, money market funds, etc. One caveat to the undeposited customer checks is that
Can't be post-dated.
They can't be post-dated. So a check that is, in other words, if a customer writes a post-dated check, we're not going to call that a cash or cash equivalent until the check can actually be cashed.
Right.
Even if the post date is only 5 days away, we still don't count post-dated checks. I don't know who made that rule. It's too bad he couldn't trademark it. Maybe he'd made some money on his rule, but that's just the rule. Anyway, so that's kind of my little.
What about a savings account?
Definitely a savings account. Yeah, we don't even call that a cash equivalent. We call that cash.
It's just cash, okay.
Because you can usually withdraw at any given time. But like a certificate
so you're checking your saving accounts work, but not certificate of deposit.
So a certificate of deposit that has a due date of less than 90 days, like it's going to come mature in
Right.
a month, I would count that as a cash equivalent, even though it's not on the list here.
So CDs.
Right, because they're very stable. They're,
less than 90 days.
Anyway, so that was as much presentation as I have. Does anybody want to look at any specific problems or have questions to try to answer?
Do you mind if we look at that 7-12? I know it's relatively simple. I just got it wrong once or twice. I'm not sure which ones to add up.
Okay. Yeah, give me a second and I'll pull it up.
Okay.
So that one is on the second homework, right?
Yeah.
Let's see. It's taking me a minute. All right, so exercise 712. Let me open up an Excel spreadsheet here. Whoops, that wasn't smart. I clicked the wrong one. All right, sorry, that took a minute. So in essence, I just have to go through this list and be like, okay, $70 of currency and coin in a locked box. So currency and coins definitely cash or cash equivalent.
Oh, either or, okay.
Yeah, so this is.
Makes me think of the petty cash because that's what it says.
Yeah,
about
that's
petty
probably
cash.
what it is, right? It's probably some petty cash.
But it's still cash that you would include in your.
Yeah,
Okay.
definitely. That's money you could use to pay bills in a pinch, or maybe buy some donuts for the office breakfast. I don't know. I don't know if donuts count as breakfast. My kids think they do, but they also like cold pizza in the morning. So I don't know. 11,100 U.S. Treasury bill due May 31st. Since this is April 30th, that's within that. So that's definitely going to count.
Yeah.
11,100. I've got $300 April dated checks that Windsor has received from customers but not yet deposited. So these are dated during the current period. So we're going to call those cash equivalent.
It's included. Okay.
Yeah. $96 check received from a customer in payment of April account post dated to May 1st. We're not going to include that. I'll put that over.
Okay.
Yeah, I'll put that over here for not. So we'll say this is the included column and then not included. 2730 in the company's checking account, definitely. 5210 in a savings account, yes. $70 of prepaid postage in the postage meter, no. Even though it's definitely a current asset, right? It's something we have that gives us value. And then a $40 IOU from the company receptionist, that's worth as much as the paper it's written on.
Yeah.
I don't know, maybe she's good for it. I'm not judging, I don't know.
All right,
then,
cool.
Does that make sense?
Yeah, then just add up the good ones and.
Yep.
Do you do anything with the ones that aren't cash equivalent?
No, all they're asking for on this problem is what the cash and cash equivalents are.
It's just very small, so I can't read it. So
you
I'm
need a
just
bigger
listening.
screen. Janice. That's what I think. Like I'm sitting
Maybe.
here with like the dual 18-inch monitors, and
Well, on my screen, it's like,
plenty big. All right. Anyway, I can't see it from your end. No, I know students who try to do these on their phone, and I'm like, man, I don't like even doing it on my iPad. But part of that's because I'm getting old and can't see anything. I'm blind. So anyway, so other questions or other problems we could take a look at? I know what
Thanks
you're
for
thinking.
that.
Just do all the homework for us, Fox. Like just
Yeah.
do it all. And I'll be like, I always tell people the great thing about teaching is like other people do the work, but you get paid. So I don't know if I want to do all your homework for you, but I'm certainly willing to help. And what I like about Wiley is at least your numbers will be different. So you'll still have to go through and like figure it out, even though we go through the process.
That is true.
Ying, any questions? You're looking like really pensive, like just deep in thought. Like,
No, I don't have any question.
It's like, if I were a Pokemon, which one would it be? Or
No, I was hoping they would ask good questions, but I don't have any questions.
wait, were you just saying that they don't ask good questions? Were you attacking your fellow
No,
students?
no. It's a good thing.
Oh, it means
That's
they
No,
not
got
as confused as I am.
My questions are the last two exams, not what's current.
Okay. Well, if we don't have more questions, it's okay. Like, we don't have to stay an hour. I mean, unless you feel like I'm not getting my money's worth out of this class unless we spend at least an hour every Thursday night.
Well, if you have an idea of what types of questions were missed on the last exam, maybe some of us missed them, and maybe it would help to understand.
Yeah, I mean, it's there's not a consistent
Not a consistent
pattern or something like that. You know, if there were a consistent pattern, Jesse's out, I guess. He's just like, I'm good.
I'm done.
Bye, Jesse. He didn't even say goodbye. Anyway, I'll be all right. So there's not necessarily a consistent pattern as it relates to, but like I said, I would be glad to, when we have time, to go over the ones that you missed, the concepts you missed. Just because BYU takes this kind of hard line that's like, tests aren't for learning, they're for demonstrating what you've learned, and therefore we don't review tests. And I get what they're saying. The quizzes and the assignments and all of that stuff is the learning process, and then the exam has one function, and that function is.
No, but if you don't know what you missed,
then what? You moved on. We're moving on.
We're like, we're on to the next one. Hope I remember that for the final exam, because that's comprehensive, right?
Well, and so there's my counter argument to their argument, right? Is that might be true if you didn't have a comprehensive final. But if you have a comprehensive final, then we have to take each exam as a part of a kind of an iterative process, a step-by-step process. And so it's frustrating to me that we can't just show it, but I understand that it would be a nightmare to have to deal with the fact that we'd have a bunch of exams sitting out there on the internet because everybody would copy and paste it and put it out there. You could probably, I bet if you went out and Googled, Wiley Plus for this book, exam questions, people have probably put them out there. Because BYU is not the only one that uses this book. There's always students willing to sell you the exam questions out there.
I just want to learn the stuff. I don't want to pay for someone else's whatever.
All right.
So should I email you to arrange a time? So
yeah.
It's not on this recording thing.
Yep, that's exactly right.
Okay.
Yeah, I just don't think it's right to talk about people's specific exam questions on a recorded thing.
Right, I wasn't asking you to do that. I just wanted to know the best way to.
Yeah, we just set up a time and we can meet and go over it.
Okay. I attempted I attempted the first problem on this, thinking I'm like, I got this. You got the balance, and you subtract your outstanding, blah blah blah. But yeah, I missed something. So, like, I'm not going to do any more of that problem until I finish the self-study.
Right. Okay. Well.
Because I didn't know there was a difference between per book and per bank.
Uh-huh.
So I probably
that's
will go back and look at the problem, and it'll say, "Oh, this is per whatever," and so.
Right.
then
Yeah,
I'll
that's
figure
the
it
most
differently.
confusing part of it, I think, is it's just in terminology we don't use all the time, and so it takes a little getting used to the way it's set up. And once you do, it's not too bad. I guess so. If we don't have any other questions or things to discuss, we can finish up. If that's all right. Gang, you good?
Yes.
I know you already said you were, so I don't know why I'm asking you again, but I just want to be sure. All right.
And our final paper is due Saturday, right?
Yes, I believe so.
I didn't really. Well, I won't say that because this is recorded. Never mind.
You could say your opinion. The thought police aren't out. I mean, I know it is BYU, but there's no thought police. There's just beard police. That's different. And even that's chilled out. So
As long as you don't swear, Janice, we'll be fine.
right, yeah, you can.
I know, but
I'm just teasing
people
you.
in this
You
class
don't.
are gonna listen to it.
Yeah, no, I got you. So why don't we say a prayer?
So I don't want to be mean, like I don't know how to shorten my paper, and I didn't get suggestions for shortening my paper. I asked.
Yeah.
Sorry, I don't remember who the person was. She gave some nice comments about what I had, but she didn't respond to how I could shorten it.
Maybe she just figures you just chop out a paragraph and you're solid.
Okay, that's what I'll do.
She trusted that you can figure it out. She had confidence in you.
Yeah.
Okay, we'll look at it that way. Sorry,
All right.
sorry,
Anyway.
ma'am. It was a girl.
All right. Why don't we offer a prayer, and then actually, if gang, if you're good, we could say a prayer and then finish the meeting, and you can go, and then I can go over the Janice's questions with her right now, if you have time, Janice. Instead of trying to find another time. So we didn't say an opening prayer, which means we've been, I don't know what that means. We've been accounting in sin. I don't think so. Just without a prayer. Is that even a thing?
If you're
again, this is maybe me trying to make accounting sound way more exciting. Maybe I could write a book or something. Anyway, so Ging, would you be willing to offer the benediction?
Of course, I don't mind at all.
Right.
Our dear kind Heavenly Father, we are so much thankful for this day, and we are thankful for all of our many blessings. And we are thankful for Brother Fox for his patience with us. And we ask you to please help us have a good night and help us have a good rest of our week. And please continue to guide and bless us with our study, that we'll be able to learn all the materials that we need to learn, and that we'll be able to apply them to our lives. And we'll leave all these things in the name of Jesus Christ. Amen.
Amen. Thank you very much.
Thank you.
And have a great night.
Okay, bye.
Bye.